get paid. And if not, shrug. There's nothing they can do about it. The working capital gap starts with this knowledge gap. Worse, a whole industry has sprung up to take advantage of it. Invoice factoring services, micro-lending services, invoice gateways, payment gateways, procurement portals, accounting software, and yes, automated reminder email platforms such as the one I had myself conceived, all promise to help you improve cash flow. But what they are all missing is that getting paid on time is not a technology problem. It's a communications problem. It follows that it requires a communication solution. That's what this book is about. How to talk to your customers so you are not only getting paid on time, but building your relationship with them in the process. Some of it will make you uncomfortable, as it challenges the entrenched notion that a delayed payment is always the customer's fault. But as you settle back and listen to it with your own cup of coffee in hand, you will feel empowered because there is something you can do. You will feel reassured because you can regain control of your balance sheet. You will feel your business move forward because cash flow will gain traction when you rev up sales. You will look forward to calling customers as a contribution to customer service, rather than a drain of your valuable time. And you will never have to make those dreaded collections calls again. Part 1. This book and how to use it. 1.1. What's in this book? This book is designed to help you get paid on time by your customers. It is intended for companies of all sizes who allow their customers credit terms and are struggling with late payments. Whether you are a startup or a substantial enterprise, you will find here a solution to the problem of managing accounts receivable. We simply argue that, since solvent companies always pay some suppliers every month, you should make it your objective to be one of the suppliers who gets paid. This requires removing any real or imagined obstacle to timely customer payment through a single-minded approach to communication and service. If you currently get paid in cash and are not owed money by any customers, you might want to spend your time and your money elsewhere. Unless you are just curious, in which case continue on. Nor is this a manual for those in crisis, though we certainly offer good advice for companies for whom late payment has become critical, as well as a quick wins guide in Part 8. Every company which offers credit terms will benefit from what is in this book, because the solution offered builds better customer relationships, unites your team, and creates resilience in times of disruption. In the book, we lay out practical steps to becoming first in line to get paid, based on the adoption of what we call the virtuous revenue cycle, which emphasizes customer intimacy and service. Early on, we describe and debunk 9 commonly held misconceptions about why companies, you, get paid late, to help you build alignment within your own team by anticipating objections. Overview. We recommend you listen to this book as a whole, but to help you get started, there follows a summary of what is in each of the 9 parts. Part 1. Definitions. In Part 1, we define accounts receivable, AR, or simply receivables. We describe how the money your customers owe you can be broken down into a terms-driven and a process-driven component, each of which must be treated differently. We also suggest you measure AR using the term Days Sales Outstanding, DSO, so you can track how effectively you are managing this important asset. We provide examples of DSO measures. Part 2. The Virtuous Revenue Cycle, VRC. In Part 2, we introduce the Virtuous Revenue Cycle, VRC, and briefly summarize each of its elements. The VRC is a cycle of continuous improvement which changes service culture, delights customers by anticipating and responding to their every need, and ensures that you get paid on time. The magic of the VRC is that the delivery of prompt payment is an implicit outcome, rather than an explicit one. Your customer interactions begin and end with service and intimacy, and ugly conversations about tardy payments are consigned to the past. The VRC begins with top-down ownership and a clear definition of mutual expectations through a written credit policy, and uses proactive customer service and responsiveness and total team engagement to identify and resolve unmet customer